First of all, what is your view on the bond market after the quantitative easing here in the Eurozone?
I guess the markets have rallied quite a lot since the announcement of QE, but they've rallied quite a lot in advance of the announcement. So we now sit here with about 25% of European government bonds with a negative or zero yield. So on that basis, you have to conclude that quite a lot of the markets are expensive at the moment, certainly in the government bond space.
What about the other areas, for example, the United States and the UK?
In terms of government bonds, they're probably all quite expensive, although there is more value on a relative basis between the US and the UK than there are in Europe. But what we tend to prefer is credit, and certainly going into high yield, some of the areas we think are particularly, well, certainly attractive and much more attractive than government bonds.
Why should people invest in fixed income today?
I mean, fixed income will always provide more stability than some other asset classes, such as equities. Secondly, you're always going to be provided with a reasonably consistent level of income if you're investing in fixed income. But thirdly, if you look at the uncertainties around global growth and possibly the difference in path towards QE in different parts of the world, I think equities might offer more volatility, but fixed income would offer much lower volatility and a more attractive risk-adjusted reward. But also, you need to make sure that you're using all the different parts of the asset class. So fixed income has government bonds, investment grade, high yield and emerging markets, and a blend of those is reasonably attractive.
Looking at other areas all over the world and other sectors, which bonds do you like the most and why?
I guess if I take fixed income as one asset class, it looks expensive, certainly on a historic basis. But then if you start to chop up the asset class into different types of bonds, we prefer credit to government bonds. Within credit, we particularly like high yield. And then within high yield, we prefer US markets rather than European markets. So US high yield looks attractive. There's reasonably attractive spreads at the moment, and certainly combined with a stronger economic backdrop, we quite like US high yield. Secondly, credit, possibly in Europe, but also, investment grade credit in Europe, but also in the US we quite like. And then lastly, I think inflation-linked bonds look pretty cheap to us. No one's worried about inflation, particularly not in Europe. And what we've started to think about, particularly in 2015, is buying more European-based inflation-linked bonds, as we think the valuations are attractive. And while we don't fear large amounts of inflation anytime soon, we certainly think that the valuation argument is pretty compelling. And at some stage, once you start to see QE working and a sort of improved growth, then people's inflation expectations should pick up, and that should be good for inflation-linked bonds.
Thank you very much for your time.